Let's talk about Essilor International, which is a French ophthalmic optics company. Designs, manufactures and markets a range of lenses, as Gary was saying earlier, and that's really to improve and protect the eyesight. And the merger of the lenses and the frames is what we're talking about here.
Indeed. So when Gary said it's roughly the same size, if you look at its listing in France, it has a market capitalization of 26.4 billion euros, which is about 29 billion US dollars. So very, very similar in scale. And
price to earnings ratio 32.6, dividend yield here of 1.2%. There's the graph, and it is looking
similar.
Stronger than what we saw on the Luxottica front.
And it got a little bit of a lift when the deal or the terms of the deal came out. But when it is measured, it's not a cash buyout, it's a merger of equals. Effectively, the French listing will be used. And people who currently own Essilor shares will get Luxottica shares, and it'll be a combined Essilor Luxottica or Luxottica Essilor. I don't know what they're going to call it.
As we always say when we see a merger of almost two equals, what will the value unlock be here? Are you as enthusiastic as Leonardo Del Vecchio about the transaction?
You see, I think you look at Essilor itself. I mean, it's got about a 40% market share of the prescription lenses. So I think there's been real concern around the deal whether this is actually going to be able to go through because of competition issues. I mean, they're really going to be.
So it's not a done deal.
They're going to be an absolute heavyweight. Again, at the moment it looks all these things. There's a lot of hurdles that they have to jump over, but it looks like most of the stuff has gone through already. But again, I mean, I think what we're not maybe driving home is just the scale of these companies as well. I mean, this company having 60,000 employees, they produce 500,000 lenses a year. I mean, it's a giant operation, and together they're going to have incredible market pricing power. And one of the reasons.
But these are two companies with market caps of 25 billion euros.
But in the sunglasses world, and the problem is that
the heavyweights in the sunglasses world.
Because you look at it like Zotica owns the outlet, so they own the sunglasses house, etc. Now the lenses. Now they've also got the brands that have to pay the licensing. I mean, they're price setters. There's no question about it. They get to set the price on sunglasses, which is a little bit of a concern from a regulatory point of view, but certainly wonderful for shareholders who are going to reap supernormal profits. The problem for me, though, is that these are not, but as you said, both of these have run up on the announcement of the deal. They're both trading on fairly extended multiples, and we're looking at the EPS growth over the next, say, 3 years. You're looking.
So are you telling us we've missed the boat?
Mid-single digits. That's like, I mean, the market is pricing in a lot of synergy between these two companies, which I think they'll get, but it's in the price already for me.
So we've missed the boat.
I think so.
And it's not hot as a result.
For me, it's not hot. I think let the merger go through, let that risk come out of the stock, look for any weakness, and definitely a fantastic company to buy because of that monopoly pricing that they have. But I think be cautious of buying at highs.
Do you agree with Gary on this?
No, I think there's still plenty of scope. So the industry itself is going to get a massive lift. I mean, like I said earlier, countries where eyeglass wearing is still very limited, and people would love to have a
and people are living longer, and they will need to maintain their eyesight.
I mean, this company Essilor basically invented the Verilux lens, which is the kind of thing I'm wearing here, where you basically have the ability to look at documents here, and they're crisp, and also over there, on account of the changing
I believe it can create a certain element of seasickness.
No, the old system, like 20 years ago, you would have like a little carved piece in the lens, and then that was because the manufacturing techniques here are tremendous. So that coupled with the frames, I think it's an absolute no-brainer. The company together, it's going to fly.
Yeah, Paul, you're not concerned about the new like laser technology. I mean, I've seen they're taking these tiny lenses like that small, and they're actually cutting a portion of your pupil out, fitting it in, and having a bifocal inside your eyeball.
We're going to talk about that in a minute, because obviously the LASIK surgery, those are the machines which do all of that stuff. But for me anyway, that's like so high up the market. The opportunity for Ray-Ban is enormous, because that is where you want to be in terms of the mid-market. The top end of people who can afford 50,000 Rand to have their eyes tinkered with a robot.
But remember, it's going to get cheaper and cheaper with
looking
robotics.
On a 10-year view, what do you think their capacity is for bringing in augmented reality as well?
You may be aware that Novartis...
You really are on top of the AI discussion.
But
Novartis, which owns one of the key players in the robotic surgery market, we're going to read about in a minute, Alcon is looking to sell that division. So who do you think might be inclined to look at buying that? I reckon Essilor or Luxottica might well be there.
And include that artificial intelligence element.
and
Augmented
then
reality.
get into robot eye surgery and be across the board in that particular market. So
No end to the vision for this company if we were to create it. Imagine if we were sitting around their boardroom table.
So now we're going to have to go hot or not on
Yes,
this one. Then we have
you
to.
know, but Gary's already gone not hot.
I'm going to go not, yeah. I'm going to go not.
So
I'm
you're not
definitely
listening?
going to go hot on this
Okay.
one. I think it's a great stock to own, and it doesn't matter whether you got in through Luxottica or you get in through Essilor. It's all
You're going
all
hot?
systems go.
We now